In January of 2021, a group of anonymous Reddit users caused billions of dollars in losses to one of the biggest members of Wall Street. Prior to that, it was up over 1,700% and 140% of GameStop's total float was sold short. 5 days earlier, Roaring Kitty, a YouTuber, posts strange videos online about why he thinks the GameStop stock is really undervalued. Lots of his friends watch and they have a huge laugh about it, but there's not really much movement online. Wall Street doesn't care, but he does. He knew that the stock price would soar. Melvin Capital and others on Wall Street started shorting GameStop more than 100% of its float, which is unbelievably risky. Many of the larger investments thought that the stock was a joke or a trend online and didn't believe it could hold much value. But Keith Gill, a financier and investor, analysed the stock and overshorted before anyone else noticed. He saw the squeeze coming. He personally invested over $50,000 of his own money into the single stock before anyone else did. A day later, Wall Street followed, and the meme spread virally over social media. People are investing millions into this stock, and Elon Musk even tweets "Game Stonk," which only increased the awareness of it. You see, on January 27th, Mashable reported that the subreddit r/Wall Street Bets had received 73 million page views in 24 hours, which was an all-time record, but prior to the surge in October, there was another YouTuber, Stonks Flying Up, who said that a short position by Melvin Capital could be used to execute a short squeeze, even compared it to the Chernobyl explosion. So on the 11th of January, the stock jumped up upon the announcement that the activist and investor CEO Ryan Cohen was joining the board of GameStop. The stock increased over 1,500% over the next 2 weeks. This extremely high volatility meant that trading was completely halted multiple times, which is very unusual. According to Dow Jones market data, more than 175 million shares were trades on January 25th, and many of those were young teenage investors. As of January 28, 2021, the stock price was peaking at $500 a share, up from $17 at the start of the month. Worth over $350 billion, the 1 million shares were deemed failed to deliver, so on that day the total market cap of $33.7 billion was temporarily the highest value company on the Russell 2000 index. Later that day, numerous brokerages added limits to the stock and other volatile companies. Robinhood announced it would begin to allow limited buy, and it kept unlimited sales. Trading 212 and eToro blocked buys altogether. While continuing to allow sales of the stock, Webull halted buy orders for stocks affected by the squeeze. Some people even accused Robinhood of illegally selling shares without consent. By the 29th, there was a delay as high as 2 days between when the stocks were purchased and when they were actually exchanged. There was a desperate need for increased collateral for the brokerage firms, but it could not be obtained in time for the market movements, and since they would not cover the immense value, they had to halt trades altogether. The DTCC, for instance, increased the total industry-wide collateral requirements from $26 billion to $33.5. By February 1st, GameStop's stock price had fallen dramatically, losing more than 80% of its total value. On February 2nd, the close was below $100 per share. Reports estimated that around $27 billion had been erased. The knock-on effects included shares like BlackBerry and AMC falling as well, likely due to the restrictions caused by bad brokerage management from Robinhood and other brokers. As the shares fell even more, some people lost significant value and really suffered financially. There's been loads of movies and documentaries made on this. Fast forward to February 24th, there was a massive rise again to $91 and then to $194 11 days later, and after the announcement of the managerial changes for e-commerce. The company's stock remained around 25% shorted. There was another surge back up to around $350 per share on the morning of March 10th, but then another humongous fall back down to a more stable $50 share price. There were many millionaires made from this crazy volatility, but there were also huge losses. Melvin Capital lost 30% of its value since the start of 2021, and Citadel LLC invested $2 billion into Melvin. Other firms such as D1 Capital Partners reported a loss of $4 billion, which was 20% of its total capital. Senvest Management made $700 million, and Mudrick Capital Management made $200 million on its profits from AMC debt. Morgan Stanley saw a 20% rise to the 350,000 shares it's owned since 2020.